All right. When you picture a global financial hub, what comes to mind? London, maybe? New York? Yeah, the usual suspects. But what if I told you that one of the most exciting fintech revolutions is happening somewhere smaller? We're talking about the Netherlands. They've been quietly building a powerhouse, so let's get into it and see how they pulled it off.
Okay, so it all kicks off with this number, 860. Actually, over 860. That's how many active fintech companies are up and running in the Netherlands right now. And listen, we're not just talking about a few startups in a garage here. This is a massive, full-blown industry.
And those 860-plus companies? Well, their combined valuation is a whopping 14.2 billion euros. Yeah, you heard that right. So this is way beyond just some niche tech scene. We're talking about a serious economic engine for the country, one that's punching way, way above its weight. So the big question is, how does that actually stack up against the rest of Europe?
Well, get this. That number puts the Netherlands at number 4, the fourth largest fintech market in all of Europe. They're right behind the big three, the UK, Germany, and France. I mean, for a country of that size, that is just incredible.
So, okay, we've established that it's big, it's a powerhouse. But what are these companies actually, doing? Let's take a closer look and break down what this market is really made of.
Okay, and this is what I find really cool. Look at the diversity here. Sure, payments are the biggest chunk, about 28%, which makes sense. But the innovation is spread out all over the place. You've got lending, wealth tech, insurance, even reg tech, that's regulation tech. This ecosystem is definitely not a one-trick pony. It's healthy, it's diverse, and that's so important, right? It means the whole industry is way more resilient, it's built for the long haul.
Now, it's probably no surprise that Amsterdam is the epicenter of all this. About 65% of these companies call it home. But what's really happening is growth across the entire country. The whole sector now employs over 32,000 people, and it's still growing, fast.
All right, let's bring this down from the big market view to everyday life. Because for most of us, this is where the revolution really hits home, every single time you go to pay for something.
I mean, this chart right here tells you everything you need to know. Just look at that huge blue slice. That's ideal. It has a 72% market share for online payments. It handles 1.4 billion transactions a year. It's not just another way to pay, it's the way to pay. It's basically the national standard, totally baked into how everyone shops online.
And it's not just online. Look at the change in the physical world. Back in 2020, only 42% of in-store payments were contactless. Fast forward to today, and that number has jumped to almost 90%. Tap to pay is just how you do things now. And because of that, cash is just disappearing. Cash transactions have totally tanked, down to only 14%.
So here's the headline number, 97%. Think about that. Almost the entire population of the Netherlands uses digital payments. This has nothing to do with being tech-savvy anymore. This is a fundamental society-wide shift. It puts them right at the front of the line in the global move away from cash.
But this whole thing goes so much deeper than just how we pay for coffee. It's shaking up the very idea of what a bank even is. You've got these new digital-first players who are completely changing the game when it comes to managing your money.
And these are the main disruptors, the neobanks. Basically, they're all digital banks. No branches, no tellers. You've got the homegrown hero, Bunk, leading the charge with over 1.2 million users. But you also have the big international names like Revolut and N26 making huge inroads. So let's be clear, these aren't just some fringe apps for tech nerds anymore. They're serious players with millions and millions of customers.
And people are signing up fast, especially young people, a crazy 22%. That's almost 1 in 4 young adults have an account with a neobank. That tells you everything about where things are heading. It's a massive shift in who people trust with their money.
Now let's keep it real. The old guard, the big three banks, they still have a huge slice of the pie, about 84%, but the writing's on the wall. The trend is crystal clear. This quote from the Dutch central bank says it all. They're losing ground year after year to these newer, faster competitors.
So what's pouring gasoline on this fire? And what's keeping the whole thing from going off the rails? Let's zoom out again for a second and look at the two big forces at play here, the money coming in and the rules being written. First up, the money. In just the last year, Dutch fintechs pulled in 1.8 billion euros in funding. That's a 24% jump from the year before, so clearly investors are hungry and they see something special happening here. But what's really fascinating is who is investing.
A huge 82% of that cash is coming from outside the Netherlands, mostly from the US and the UK. So this isn't just some local boom, this is the rest of the world looking at the Netherlands and saying, yeah, that's where we want to put our money. It's a massive vote of confidence on a global scale.
Okay, so you've got all this cash flooding in, but you also have the guardrails going up. New rules from the EU are making the whole space more professional and, frankly, safer for everyone. We're talking about things like PSD3 for open banking, MiCA for crypto, DORA for making sure systems don't crash. The point is, this isn't the Wild West anymore. It's a serious, grown-up market that's being built to be both innovative and secure.
So, you've got momentum, you've got money, and you've got rules. The big question is, where does this all go from here? Let's try to peer into the crystal ball and see what the future of finance might look like, a future that's being prototyped right now in the Netherlands.
This timeline gives us a pretty good idea. Pretty soon we could see the Netherlands becoming a test ground for the digital euro. A couple years after that, AI is set to automate over half of all the boring compliance paperwork. And then, by 2030, and this is a big one, the prediction is that half of our day-to-day banking won't even happen through a traditional bank anymore. It'll be through a fintech platform.
And the big idea behind all of this is something called embedded finance. The name sounds fancy, but the concept is simple. It's the idea that financial stuff just disappears. It gets woven into the other products and services you already use, so you don't go to the bank for a loan. Your accounting software just sees you need one and offers it right there. It's seamless.
Which brings us to a pretty mind-bending final thought. If your car can buy its own insurance and your software can approve its own loans, what is a bank anymore? When finance is everywhere, embedded in everything we do, what's the point of a building called a bank? That's the huge question this whole revolution is making us all think about.